Assalamualaikum warahmatullahi wabarakatuh and selamat sejahtera. Hello everybody. In this video, we will learn adjusted trial balance and financial statement after adjustment. If you like this video, please subscribe, like and share. In this video, we will learn how to prepare adjusted trial balance, statement of comprehensive income, statement of owner's equity, and statement of financial position. First of all, we will learn how to prepare adjusted trial balance. The adjusted trial balance is prepared to show updated balances after adjusting entries have been made. The grand total of the accounts with debit balances should equal the grand total of the accounts with credit balances. It is also the primary basis for the preparation of financial statements. The adjusted trial balance is completed to ensure that the period-ending financial statement will be accurate and in balance. An adjusted trial balance is prepared before adjusted trial balance. An adjusted trial balance is the listing of general ledger accounts balances at the end of a reporting period. That is before any adjusting entries are made to the balances to create financial statements. An adjusted trial balance is used as the starting point for analyzing accounts balances and making adjusting entries. For example, the adjusting entries are made based on the N adjusted trial balance and additional information. For additional information A, no adjusting entries need to be made because it is inventory. For additional information B, it is correcting entries. That is, personal expenses are incorrectly recorded as other expenses of RM15. So, the correcting entries debit drawings 15 and credit miscellaneous expenses 15. For C, the rental expense that has occurred is RM200. So, the adjusting entries debit rent expenses 200 and credit prepaid rent 200. D, accrued salaries expenses is RM400. So, the adjusting entries debit salaries expenses 400 and credit salaries payable 400. And E, depreciation of fixed asset is 5% of the cost of the assets. So, the adjusting entries debit depreciation expenses, that is the cost of asset 3,000 times 5% equals to 150, and credit accumulated depreciation equipment 150. There are two ways to prepare an adjusted trial balance. The first way, list all the accounts in the an adjusted trial balance in the table as follows. Then, place the adjustments that have been made. Those are adjusting entries and correcting entries. Those are drawings, salaries expenses, prepaid rent, miscellaneous expenses, rent expenses, salaries payable, depreciation expenses, and accumulated depreciation equipment. After that, add all the amounts involved in the adjusted trial balance, such as drawings, 629 plus 15 equals to 644, and so forth. The second way to prepare an adjusted trial balance is to write directly the adjusted trial balance and identify the accounts involved with the adjustment by placing brackets to show the workflow for changes in the balance on the accounts involved, and then add the additional accounts that involve. And this adjusted trial balance is the primary basis for the preparation of financial statements. Then, identify the accounts involved with the financial statement. Capital, owner equity, drawings, owner equity, inventory, cost of goods sold, purchases, cost of goods sold, sales, under sales, salaries expenses, under expenses, prepaid rent, assets, miscellaneous expenses, expenses, accounts receivable, assets, accounts payable, liabilities, equipment, assets, cash, assets, rent expenses, expenses, salary payable, liabilities, depreciation expense, expenses, and accumulated depreciation equipment is contra to assets. Statement of income or statement of profit or loss. From the adjusted trial balance, arrange all the accounts involved with the statement of income that has been identified earlier. Write the title first, then sales 6,000 minus cost of goods sold. Those are beginning inventory plus purchases minus ending inventory equals to 3,300. Then we get gross profit 2,700 minus operating expenses amounting 3,347. Then we suffer net loss 647. Statement of owner's equity. The statement of owner's equity portrays changes in the capital balance of a business over a reporting period. The concept is usually applied to a sole proprietorship. From the adjusted trial balance, arrange all the accounts involved with the statement of owner's equity that has been identified earlier. Write the title first, then capital minus net loss minus drawings equals to owner's capital 12,637. Statement of financial position. Same goes to financial position. From the adjusted trial balance, arrange all the accounts involved with the statement of financial position that has been identified earlier. Write the title first, then assets. Those are non-current assets plus current assets equals to 14,117. must be equal to owner's equity and liability 14,117. Those are owner's equity 12,637 and liabilities amounting 1,480. Okay, that's all for adjusted trial balance and financial statement after adjustment. If you like this video, please subscribe, like and share. Thank you for watching. Assalamualaikum warahmatullahi wabarakatuh and selamat sejahtera. Bye.